With first 6 months of 2022 behind us, it's time to take a stock of what's happening in India's office market, which has been an investor's darling. Now, well, the sector's just about stabilized from the pandemic onslaught, and it now faces a fresh set of headwinds. Inflation, which makes every company look for ways to cut costs, and bringing down office rents is one of them. News of layoffs among startups and IT companies has started to come in. And an economic growth slowdown is already visible globally. How resilient will India's office market be going forward? Joining me to answer that question, Nirupa Shankar, Executive Director at Brigade Group. We also have with us Ramesh Nair, CEO Colliers India, and Gagan Randev, Executive Director, India Sotheby's International Realty. Nirupa, I'm going to ask you the question first because I'm sure you're looking at leasing numbers on a daily basis, weekly basis and fortnightly basis. Are you bracing yourself for challenging times on office leasing demand and a pressure on rentals in these inflationary times?
Thanks for having me, Manisha, and hello to everybody. Don't say that just yet. You know, we've just come out from 2 years of a really tough time and we're not ready for another slowdown. Honestly, we've had a great first quarter for FY23. It's been extremely encouraging, and I think the numbers have been extremely encouraging from what has happened in the past 2 years. Mm-hmm. It's the highest leasing numbers we've had in the past 8 quarters. So we're all bracing ourselves for a very resilient FY23. Yes, there is talks of slowdown across the globe. Of course, there's macroeconomic conditions like the Russia-Ukraine war. But quite frankly, we are seeing a lot of our tenants, planning for the year ahead, planning for their expansion, planning for their growth. There are certain sectors, that have really benefited or come out stronger post-COVID, whether it's pharma companies, whether it's IT services companies, financial services companies. And they're all looking to expand their portfolio. They're all looking to get their employees back into work. Everybody's making plans for their future expansion. So quite frankly, we are very bullish on the year ahead.
All right, that's good to know. Ramesh, then over to you. You came out with a report saying that the trend has been for 8 quarters of rising office vacancies. But in Q1 of 2022, that's been broken for the first time. And Nirupa says that leasing has never been better, as in Q1 2022 since the pandemic. Now, my question is that it's sort of stabilized at 18.5%. That's what we saw in the December quarter as well. Isn't that still too high a number? I mean, the industry, at least the top, one would expect that, 9 to 10% is the sort of number one would be comfortable at.
Manisha, when the various property consultants report vacancy, we should also remember that there is around 8-10% of space which is going to remain vacant forever. This could be things which are strata sold, not well-maintained buildings, old buildings. So that 7 to 10% structural vacancies available in most markets. If you look at established markets like, let's say, Mumbai or Delhi, so that will continue. But coming back to the other part of your question, Manisha, is office space has shown a lot of resilience. We saw that 13 million square feet of office absorption in the first quarter. And like what Nirupa said, that kind of numbers, we don't see that often. And the second quarter numbers are not yet come, but I just checked with my research head, what is the trend showing? It'll be out in the next few days. It's again looking like a very strong second quarter. Mm-hmm. So we believe it may come even close to a 13 million square feet mark again, which will take it to 26 million square feet in the first 2 quarters if you're able to meet that kind of numbers. And we should remember that last year, we saw the office absorption go up to around 33 million square feet, which was like a 10% year-on-year growth, the full year. And pan-India absorption in 2021, it actually surpassed the average annual absorption between 16 and 18 by around 7%. So I know 19 was a blockbuster year where we saw that 46 million, but 16 to 18, we saw very steady years and real estate was growing. One thing which is important, and Nirupa also kind of touched on that, is India may not end up in a recession, but any slowdown of the global economy or the US economy will obviously have an impact on India. I know the next 2-3 months we'll use terms like decoupling. and very soon forget about it, because we would have been impacted if something happens at a global or at a US level. There are two very important points here, Manisha. First is US recession will impact US corporations. US corporations spend a lot on IT. Right. Which could obviously impact the US IT outsourcing industry, which means our Indian IT outsourcing industry. We need to remember that 60% of Indian IT exports go to US. So that's very important. But the good point here is, close to, if there is inflation in US and in the West and in Europe, now there's going to be inflation-led wage hike pressure in these countries. And that lead to IT jobs continuing to move to India. And that's what I'm most bullish of. India already has around 1,400 global in-house centers, or global capability centers, what we call GICs and GCCs. This 1,400 number is expected to grow to around the 2,000 mark number. And these guys will drive office demand in the country going forward. We shouldn't forget, Manisha, again, that last year we saw close to $83 billion of FDI come into the country. And a lot of this FDI obviously translates into good office space demand.
Interesting. Ramesh, what you're saying is that there are two factors at play. We shouldn't overly worry about the slowdown in the United States of America, because that pretty much means that you could have more offshoring and global captive centers here back in India. Gagan, would you agree? Because what I can see is that rents have also been increasing in the top 6 cities slowly and steadily over the last 8 quarters.
No, I would definitely agree with Ramesh, and not only for the reasons that he mentioned. So, everything was very logical and pertinent. But I think what is going to happen is, as you get into a slowdown in the US, you are going to see an even bigger effort on part of US companies to cut costs. Now, one of the big elements of costs is people, and where do you house people in offices? When you compare India average USD 1.1 per square foot versus, I would say about $7 to $8 in the US versus $8 to $10 in Singapore and Hong Kong versus $5 in Shanghai. India is a logical place to come to. And I honestly see this more as a positive in the next couple of years for the Indian IT companies. Now, the second thing, the question, Manisha, you asked about passing rents. Now, I would take a little bit of the passing rents increase in the last couple of quarters with a little bit of pinch of salt, because what has happened is a lot of the renewals, a lot of agreements have been done with a little bit of adjustment. That means what you've done is, against a traditional agreement where you were having a 9-in agreement where the first 3 years was at 100 rupees per square foot. What you now have done is, you may have a situation where the rent now is 90 rupees, but they have structured the agreement so that there's a rent-free period at the beginning or every year for the term of the lease. So what it's effectively doing is keeping the headline rental slightly higher, but the effective rental is actually lower. So barring a couple of markets, I would say that the rentals have remained steady, but agreements have been structured in such a way that the passing rent seems to be increasing by about 2-3%. Okay. And that is really the truth of the matter.
Mm-hmm. All right. So as you said, and we'll just flash this graphics, what the rents are in India for office space. And, this is a blended rate of any market. So MMR Mumbai region is at about 122 rupees per square feet. And if you translate that into dollars, it's $1.50 per square feet. And that's what Gagan was mentioning, that we are still very, very competitive. NCR is at 87 rupees, Bengaluru is at 76 rupees, Chennai 65, Hyderabad 60, and Pune 73 odd rupees per square feet. Nirupa, I buy that, but just to play the devil's advocate here, one is also, so you're getting news of a Byju's taking large floor plate in Bengaluru. You have the news of, MasterCard taking up an entire office from Brookfield in Pune. But then there's news crawling in saying 10,000 staff have been laid off by 27 startups. You have a NASSCOM report saying that top IT companies are likely to let go of about 3 million people in 2022. Robots are going to take up their jobs. But how do you look at all these things together and say, what is to be worried about and what is news that you must just ignore?
So I think both aspects are true, right? I think there are some industries that are doing well and some that are not. And, in the startup world, the fact of the matter is 80% of them are likely to fail over a certain period of time. However, the kind of companies that are hiring, IT services, financial services, they are hiring in lakhs. If you talk to any recruitment firm, they are saying they're handing out like 80,000 offer letters every month. Maybe 40,000 of those actually get accepted and move on. But the fact of the matter is a lot of recruitment is happening in IT services, pharma companies, financial services. The large Fortune 500 companies are definitely expanding. They are your blue chip tenants. And, there are some casualties in the domestic startup world. But by and large, they're sort of offsetting each other. The IT services industry is, I think, currently the revenue that the Indian IT services industry gets is close to maybe 227 billion. And that's expected to go up to 350 billion in the next 4 to 5 years, according to NASSCOM as well. So all that comes with additional recruitment, additional requirement for office space. So it's a full cycle. And I think in this particular cycle, there will be some companies that will have to sort of let go some of their stuff. But net, I think there's a large amount of recruitment happening. And because of that, companies are expanding, their requirement for office space is increasing.
All right. So you're saying, look at the larger picture, maybe the recruitments or expansions are happening in multiples of lakhs and the layoffs are still probably lesser in number. Because, Ramesh, your report also says that the unicorns are probably one of the big ones to watch out for when it comes to office space demand, leasing demand. But I mean, that ground is looking a little bit shaky. Have you changed your mind since when that report came out?
The report is hardly 2-3 weeks old, Manisha. So I have never seen this kind of frantic pace in terms of office space demand, what we are seeing in the last few months from startups. Our research showed that startups had leased around 22 million square feet of space in that 3 years between 19, 20 and 21. And this momentum in 21 was close to 20% year-on-year growth compared to 2020. Unicorns today occupy around 14 million square feet of space, and overall startups occupy around 78 million square feet. Interesting anecdote. Last week, Tuesday, a startup called up and they said, can you give us 300 seats? And I'd passed on that lead to one of my colleagues. And on Friday, when I checked with him what's happening on that, they'd already closed the deal. So we're talking of deal closures of between like 3 to 4 days.
Ramesh, that's a good anecdote. I'm sorry, I have very short time left, but I get that point. Let me move to Gagan on the last question. Gagan, I'm looking at a supply CRE matrix data says that we're going to add as much as 31% of grade A office space in the top 6 cities by 2030. I mean,
yes.
Isn't that a lot of supply coming up? Is there demand for all of it?
So if you look at it, if you look at the top 7 cities, and the numbers could vary depending on which IPC, what forum it is from, we say officially the grade A supply is about 650 million square feet. And we are talking about 200 million square feet coming more. Now, if I were to say, yes, 31% addition is a big number in the next 7-8 years. But there, if you look at the report carefully, there are 2 markets which really stand out. So Bangalore and Pune both have about an 8 to 9% vacancy at present, and the demand, which is the supply which is coming into both Bangalore and Pune is about 26%. So these are 2 markets where I'll expect that the rents will remain very steady. These markets are doing about 2 million square feet of leasing every quarter. So I think all the supply is going to be absorbed very easily. I think the markets with a little bit of challenge are going to be Hyderabad. Hyderabad has been one of the strongest markets, but there is about 50 million square feet coming up. Now, that is almost 50% more than what is available today. And Hyderabad is already at an 18% vacancy. Now, so Hyderabad, NCR, MMR are going to be markets where, clearly there is going to be a move to quality, the better grade buildings, and some of the buildings are going to be suffering. But I think very, very robust and focus on Pune and Bangalore, and that is where you will see a majority of the FDI money also headed to.
Well, I mean, if I'm looking at the recent news, that those are the two markets where you've had big leasing happening. Byju's taking up about 5.5 million square feet in Bengaluru, and of course, MasterCard taking up about 4.3 million square feet in Pune. All right, we're going to conclude on that note with everyone defending, saying India office market story looks strong, and let's keep our fingers crossed that that resilience continues. Well, foreign institutional investors, when they're bringing in money, are continuing to put 85 to 90% of that money flow is going to office assets. So, Nirupa, Gagan and Ramesh, thank you very much for joining me today.
Thanks
you, Manisha. For having us.
All right, the Ministry of Environment's ban on several single-use plastic items, including cutlery, is applicable from July 1st, 2022. We bring you, after the break, a bevy of young companies and entrepreneurs who have a range of non-plastic biodegradable tableware for you to make a conscious switch to.